Trump tax cuts went into effect in 2018, and the world did not end. The Tax Cuts and Jobs Act bill, as is formally known, is the most significant change made to our tax code in the past few decades. It puts more money in the pockets of everyday people like you and me, and also in the bank accounts of large corporations. Hey everyone, I'm Josh Albayero, and today I want to share with you the top changes that could affect you when filing in 2020. Before we get started, make sure you subscribe to this channel. And if you are on YouTube, click the alert notification to get notified when we go live. First, let's take a look at some of the changes we noticed in 2018. Number one, our paycheck take-home portion got a little bigger. Number two, the child tax credit was doubled, therefore increasing the amount of some refunds. Number three, some taxpayers were surprised with a larger tax bill or lower refund. We will cover this in a later video. Number four, the standard deduction was increased, benefiting those with a lower income by reducing most or all of their tax bill. Number five, we, the small businesses, paid less in taxes and received an additional net income deduction. Now let's take a look at what we should expect in 2019. So when you file your taxes in early 2020, you won't be surprised by a higher tax bill or money you left on the table. Number one, the ObamaCare penalty for not having insurance is gone. That doesn't mean that ObamaCare is gone. The Affordable Care Act is still the law of the land, but you can't be penalized for not having insurance. It's kind of like if speed limits were optional. So don't go dropping your insurance coverage. Number two, a higher medical expense deduction threshold. Can you say that 10 times fast? This means that medical expenses need to be above the 10% adjusted gross income threshold for you to claim it. For example, if your adjusted income is $50,000, your medical expenses need to be above $5,000 before you can begin to claim the deduction. If you have $5,100 in medical expenses, then you could claim $100 in medical expenses. In this case, you would be better off just claiming the standard deduction. Number three, higher retirement account contributions and HSA. The IRA limits have gone up by $500 for contributors younger and older than 50. That means that if you are older than 50, you can contribute up to $7,000, and if you are younger than 50, up to $6,500. Tax-free income, baby. Consult with your retirement plan professional for all details. The HSA, or health savings account, limits are also going up, but not by much. Single taxpayers can contribute up to $3,500 and families up to $7,000. Consult with your benefits provider for all details. Number four, the elimination of the alimony deduction is another change that will take effect in 2019. For divorce and separation agreements made or modified this year or after that, alimony payments will not be deductible. So a spouse who gets divorced this year and pays alimony this year cannot write off the payments on the tax return in 2020. If you need help with your taxes, books, or want to create a plan to save on taxes, check out my company, iUgo. If you enjoyed this video, leave a comment below. Follow us. Tell other people about it. Like it. Thank you very much.